Hey everyone, welcome back to my channel. So you've probably guessed it by the title. How would I invest £10,000? Well, I'm doing one of two things, surely. I'm either going all in on a meme stock or I'm going all in on crypto. Well, we're not doing either of those. We're going to look at diversification in this video and we're going to look at growth as well. So stick around to the end to see exactly where I would invest that £10,000. So just a note before we begin, and what I want to say is if you do have £10,000 or $10,000 to invest, just a massive well done for actually having that pot to invest, because I think it's knocked down a little bit too much that we're expected, or it seems like we're expected by social media and especially other YouTube videos where, you know, £100,000 to invest, 500, even $1 million. You know, not everyone is at that stage, and actually we need to remind ourselves that if you have £10,000 or $10,000, that's a great amount to invest in. So well done. There's a little bit more planning that needs to be done if we are going to invest that money, a little bit more thinking behind what we actually do, and we're going to dive into that. So just remember, avoid FOMO investing, forget the Lamborghini lifestyle, and let's focus. And you know, most importantly, don't gamble. And what I would say is always clear down your debt before you start investing. That's the most important thing. But there's no financial advice here. These are my own personal preferences when it comes to investing, but I'm going to show you some ways in which we can do that. So we're going to break this down into 6 achievable and realistic ways of how you may look at this £10,000 and where it might be going. So what I'm going to do is I'm going to pop up on the screen next to me or as I'm talking, and I'm going to show you now the way that I would break this down into 6 different ways. So you're going to see an emergency fund, education, preserve and protect, growth, cash flow, and retirement. And this is where I'm going to focus my areas of investment if I've got this £10,000 that's just sitting there and I want to move it, and how I might go about and the reasons to why I might put it into one of these 6. So let's just start with the emergency fund. So what is that about? Well, that's to avoid investment setbacks. That is your buffer to allow you to really make big strides in your investments, because there's no point starting out in your investment journey if you don't have your emergency fund. Because if you lose your job, something goes wrong and you need to tap into that emergency fund, if it's not there, then guess what? You're going to be setting yourself back, because you'll probably need to withdraw some investment gains that you've made, which is not what we want to do. So number 2 is education. Well, you don't know what you don't know, so you need to upgrade and self-develop yourself in order to expand your knowledge to make better informed decisions, especially around finances and so forth. Number 3 is obviously preserve and protect. What does that mean? Well, we want to actually keep a portion of that money and grow it over time, and we don't want to lose it, because as we get into sort of maybe perhaps riskier investments, there is a chance that capital is at risk and we could lose some of that. So we want a good portion in preserve and protect. The next one, number 4, is growth. So we now want to grow a portion of that money. So how are we going to do that? Well, we can use things such as peer-to-peer, fixed investing, the stock market, trackers, ETFs, hand-picking stocks perhaps. Number 5, that's cash flow. So, you know, we can't invest if we haven't got cash flow. So maybe you want to add an additional side income, and that could be through starting an online business, you know, as simple as an eBay business or a Shopify store. Or, you know, doing drop shipping through Alibaba, where it's sort of you are the middleman. It never actually, the stock never touches you. Company dividends, you know, there are some great stock companies which I'll pop up on the screen now actually, that, you know, you can see anywhere between 4 to 7 to 8% per annum on a dividend. So depending on how much money you could invest into that stock, you're going to get a good dividend in return. So now we can look at physical businesses. You know, do you have a passion perhaps that you would like to turn a old van into a coffee bar, or a horse trailer into a gin wedding, you know, events bar, whatever it might be? Do you have a passion to turn a physical business into something? Do you like buying and selling cars? Whatever it might be, in order to generate additional cash flow. So that's where we're going to get into our slightly higher riskier investments, where, you know, we're going to be putting capital in, but the risk is that much higher. Finally, retirement. We need to start planning and taking total responsibility for our retirement, because look, with the state that we're in at the moment, the debt, the quantitative easing, the fact employers, the state pension might not be there in years to come, we need to start taking responsibility and planning. So how can we do that? Well, we could take out private pensions, investing through the stock market using such things as BlackRock LifePath, you know, where we're put into equities, global shares, and as we come close to our retirement, they start putting us more into corporate bonds, government bonds, and so forth. And it's a natural reduction of our exposure. And making plans like that, is wise, and we should all be doing that. Or, you've got the Fidelity Index Fund, or you could perhaps open up a SAS or a SIP pension, whatever it might be, but it's our responsibility in order to do that. So let's have a look. And what I'm going to do is I'm actually going to share a couple of slides. I'm going to put up the breakdown now of what this looks like from 10,000 into figures. So I'm going to pop that on the screen here. And as we can see, we've got the emergency fund, the education, preserve and protect, growth, cash flow, and retirement. So starting with emergency fund, if it were me, I'd probably be looking to put a good portion, which works out at 25% into my emergency fund. So £2,500 into my emergency fund. The next thing I'd be looking to do is, of course, education, because we are our biggest asset. And now I've put £300 here, and you might be thinking, blimey, that's not a huge amount, but what you'll find out soon to come in my new book, Self-Education Equals Success and Income, I do a comparison against a training course that might be $25,000 a year, whereas my budget is around about £321 a year that I spend on self-education. That's low, right? But it works, and it's brilliant. So that's at 3%. The next is preserve, protect. How much am I putting in for that? And that is perhaps through commodities, gold, the stock market, a bit of crypto exposure, stuff like that. That's at 17.5%. Then we're moving on to growth, which is £3,000. So I've got a 30% portion there that I'm going to put perhaps into fixed lending, peer-to-peer. I'm going to do some private lending perhaps, really try and maximize my return there. So I need a bigger pot essentially to really make that growth work. Cash flow, 1,250, so that's 12.5%. Retirement, 1,200, so that will go into, probably I'd put that into a tracker, maybe BlackRock LifePath. I actually have a BlackRock LifePath anyway, along with another private pension, and that is the breakdown. So, work out where you'd be putting that money. Leave me a comment below. Where would you have your spread? And that is mine. So essentially what we really want to be doing here is breaking it down into realistic pots, not going and putting it all into crypto. I do have exposure, and as I put down here, let's just go back to it, is that through preserve and protect, we will have a bit of exposure through crypto, and mine is Bitcoin, Ethereum, and Cardano. Even put some into a high interest savings account. Not that you're going to get a huge amount, but again, it's the exposure, it's the diversification. And that's what's important here, is it's breaking it down into realistic ways and understanding the vision of where this money is going to go, what it's going to do, and how we're going to maximize this 10,000 into a bigger pot. So let me know in the comments below what you would do with £10,000. Hopefully that's offered a bit of insight really on what I would do with £10,000. I'm willing to do the long game is essentially what I'm willing to do. And this 6-step breakdown offers me that with security, some exposure, some higher risk approaches through cash flow, through starting a business, and the growth through fixed investing. That's going to be your biggest investment pot that you can really start to scale. That's probably where you're going to get most growth from. But let me know in the comments below. As always, please hit like, hit subscribe, and until the next video, I will speak to all of you very soon.